IPO veterans from Renaissance Capital prefer IPOs from venture-backed firms rather than private equity.
When we're looking at the growth companies, venture-backed companies, those are the types of companies that we find most interesting. The private equity ones, I think you do have to be a little bit wary of the ones that are carrying a lot of debt, and to look and make sure that they have the cash flow that's able to cover those debt payments. And I think that that's extremely critical in looking at any of the private equity companies coming out. Even after the IPO, if they pay down debt, when that debt matures, are they going to generate enough cash flow to cover that debt? And in a less optimistic kind of economic scenario where growth isn't there, would they fall into troubled times? And I think that's going to be a key focus for investors.
Private equity, however, may not be able to unload their offerings in this volatile market.
There will be some companies that will not get done, and that's just a natural process. I think that when we look at the pipeline, there are well over 100 companies that have been actively filing and we think prepared for to move forward with their IPO plans. So even if 50% of those companies move forward, that's still quite a large pipeline.
The IPOs that have performed well in this nervous market are consumer stocks.
In the U.S., the IPOs that have done well, including Dunkin' Donuts and Teavana, the consumer's been interested in buying the products that are low-ticket items, and I call it low-ticket luxury, so your cup of coffee, or in the case of Teavana, tea. So the IPOs there, because they're fast-growth consumer, low-ticket items, have worked well in the U.S. Investors are putting much more scrutiny because investors don't want to lose money, and the IPO market hasn't been a very profitable place to be over the last several months. So investors are selective about price, and which is why we're seeing so many companies wait, thinking, well, they're like, it's very similar to the housing market. Homeowners have been waiting to put their houses on the market, thinking we're still in this very high-end market that they can sell the house, and they find out the real market has a much lower clearing price. Very similar. The clearing price has to be dropped for these, and because investors need to make money. We haven't seen that part of the equation. We're going to see it.